If you're in the market to buy a house and you live in Massachusetts, today is your lucky day. Mass Housing has just released its new programs. I'm going to go and dive in through all of the details. We'll go over the pros and the cons and see if this is a right fit for you. Now let's get started. We'll start off with their cream of the crop program, which is the Workforce Advantage 4.0. This program offers all of Mass Housing's bells and whistles. They provide you with a $30,000 second lien with a 0% deferred interest rates, which means that there's no monthly payment due on it. You get conventional financing with no loan level pricing adjustments. Simply put, your interest rate is going to be better than if you went with a standard conventional loan. There's no PMI required. Typically, when you have no PMI, it's because you're putting 20% down. Not the case here. Mass Housing is going to go ahead and omit PMI. There are household income limits for each county, and I'm going to go ahead and throw this link in the description so that you have access to all of the counties in Massachusetts. This program is for first-time home buyers only. For a single family or a condo, you're going to put 3% down from the $30,000, and the money that's left over, you can use it to further buy down your interest rate and pay for your closing costs. Your credit score requirement is at least a 640 or above. Your debt-to-income ratio cap is at 45%. Now, for a 2 to 4 unit, there is a catch. You have to put 3% down of your own money out of pocket. You're also required to have homebuyer education completed with a Mass Housing approved counseling agency. I'll go ahead and throw this link in the description as well. Now, for a 2 to 4 unit, you also need landlord counseling, which I'll go ahead and throw this link in there for you as well. There is no renovation feature available, so you cannot do a rehab loan on this one. Now, if let's say you are having a problem with coming up with 3% down of your own money, the 4.0 program also has an FHA feature, which allows you to buy a 2 to 4 unit with no money out of your own pocket. Now, the difference is here is that it's going to have monthly PMI just as any FHA loan would. All of the other features are identical. Now, once you click into the income limits, you'll find that they're quite low in some areas. So if that's going to be the problem, but everything else fits, they offer what's called the first-time homebuyer conventional loan. Now, this one is a $25,000 down payment assistance second lien. It carries a 2% interest rate, which is amortized over 15 years. So there is a monthly payment on it. The monthly payment for that is $160. So think of it this way. You're basically financing your down payment assistance that's taking you so long to save up. If you're living paycheck to paycheck, this may be the way to go. Now, just as the other program, when you're buying a 2 to 4 unit, you have to have 3% of your own money, unless, of course, you go with the first-time homebuyer FHA product, which is going to be the same thing, $25,000 down payment assistance lien with a $160 monthly payment, but on the 2 to 4 unit, you do not have to have your own money. Now, these programs are not going to be for everyone. This is basically designed for anyone who has little to no debt, fits within the income limits, and basically is not going to try to convert this property into an investment property later. The thing with Mass Housing is that they require for you to live in their home, in the home for the life of the mortgage. That means that if you buy a house now and in the future you're going to sell it, retain it, convert it into your investment property and move into a different house, you would have to refinance before you do that. Now, let's go over the down payment assistance highlights and reminders. It's for first-time home buyers only. You must meet the income household limits. It's a fixed mortgage for $30,000 with 0% deferred interest, and it's only due upon sale of the home, or if you refinance out of the home, then that second lien is going to be paid off through those proceeds. For the first-time home buyer, $25,000 second loan is for first-time home buyers only. You must meet the income limits, and you're going to have a 2% interest rate amortized over 15 years, which, as I mentioned before, will make your monthly payment $160 per month. There you have it in a nutshell. So basically, the thing to remember is this. You have to be a first-time home buyer. You can never move out of the property as long as you have a Mass Housing loan. For the WFA program, you don't pay anything back on the $30,000, but for the first-time home buyer program, you have for the $25,000, you do pay that back at $160 per month. These programs are designed for people who have little to no debt and people who are actually struggling to come up with a down payment. However, there is no asset test on these programs. So if you did have your own money, enough money to buy a house, you can still utilize this program and just keep your money, as they don't verify how many assets you have and they don't use that to disqualify you from the program. So there you have it, folks. That's the big buzz going on in the real estate world in Massachusetts. If you have any questions or comments in regards to these programs, please feel free to leave them in the comment section below, and I'll be sure to answer them. We'll catch you next time.